Defense stocks are going up in a massive way. You've got microcap stocks getting certifications, mid-cap stocks struggling with valuation, and billion-dollar companies landing contracts. But here's the thing. Not all of these stocks are equal. Some are ready to move, and some still kind of need to prove it a little bit. Let's break down these 4 stocks that you need to watch right now. If you do enjoy updates on stocks like CTM, Redwire, BBAI, and others, please hit the like and subscribe button and comment below what it is you want to see in future upcoming videos. Now, starting off with CTM, none other than CTM, as we do see here that Claude on the Prophecy AI app, I know it's going to have bullish expectations. It's going to have a bullish 1-year projection. Yes, currently at the moment, the 1-year projection is at $1.08. So they did have some pretty important news come out this week, 2 days ago actually. They just achieved CMMC Level 2 certification. And this is huge because without this, you can't even compete for certain Department of Defense contracts. Now, the thing that you need to know about this is that when you do have it, you basically are in the game now at this point. You have more of a seat at a higher table, and it opens doors to better opportunities for the company. Now, this isn't just a headline. This directly impacts revenue potential, and more contracts will equal more growth opportunities. So here's what other people missed as well. They scored a perfect 110 with 0 issues. That shows real execution, strong systems, and not just hype. And also, tying into what they said they're going to be accomplishing in the fiscal year of 2020, or in the 12-month period for the year of 2026, they said they are focusing on completing an accredited acquisition. This certification that they got is also, from what I have heard, one of the requirements to actually getting the acquisition to be completed. So that opens the door, and it does show that they potentially are on track to hit that goal of completing an acquisition within a 12-month period. Now, the next thing that I want you guys to look at is you got the equity group. And why this matters is these firms bring in institutional attention, and attention equals liquidity, and liquidity, it equals price movement. So the real take, unfortunately, but I do have bullish expectations for the company. We still are under $1 a share, closing the day at 69 cents for the trading session on Friday, April 24th. So this is still a microcap stock. It's still high risk and high reward, but definitely one to watch going into May, as they are expected to report earnings sometime in the month of May. But now, and also one note with this equity, with this IR firm that they've chosen, I want you guys to know that they actually they do have some success stories. Let me look this up real quick for you guys. So there is a stock that, what if I told you they increased the price of the share price of the company by more than 6 times? Now, this company rebranded, and right now their ticker symbol is ASTH. So they're currently trading at $33.72. Pretty good, not too bad. But what if I told you that when they first hired them in the company, let me get this back for you guys. When they first hired this company, they really did a good job of bringing notification and doing their job to bring the share price up through the services they offer as an IR firm. Because within a 9-month period, as you see this bullish spike right here, they were able to take it all the way within the $17 to $18 range, and take it all the way to the tippity top at $133.23. Now, we can't compare, and this is very aggressive to try to compare what they did for this company to Castellum CTM, but I'm just putting that out there that this company does have success stories, and they do know what they are doing. That's all I'm trying to get my point across when I say that. Now, let's move from a microcap to a company that's actually landing real contracts right now. And we've never covered this stock before, but we're going to cover it today. And that is none other, not W, none other than Redwire. And when we pull up Redwire on Prophecy, we do see here that it also has bullish expectations, and it has a 1-year projection set, and they do anticipate that the company will be hit. Claude does anticipate, or no, hold on, do we got Claude? No, we got Grok. Claude, I personally like Claude in my opinion. That's my personal favorite. But Claude has a 1-year projection at $14.27, and we currently are trading at $9.68. So they just dropped 2 key pieces of news. Now, they partnered with the Washington Commanders, which is more of a branding and awareness move. Not huge for revenue, but it builds visibility. As we do know, visibility is very important when it comes to the growth of a company. Now, the second piece of news that I read, and all of this was recent. We can just take a look at this real quick on Redwire. Here, let's just do Redwire recent news. So here, I got you guys, don't worry. Again, this was recent, like a few days ago. So yeah, the Washington Commanders post that was on April 22nd, and a little bit more a while ago on April 14th, it says that Redwire was awarded $20 million in follow-on orders from Navy and Marine Corps Small Tactical Unmanned Aircraft System Program. Now, I'm just trying to point that out, that this is real defense revenue, and this is good. And this should reflect on the financials more in the short term and the long term as this increases their backlog. And when we talk about the financials of the company, first time diving deep into the 10K for the fiscal year of 2025, I saw that their revenue was at $335 million. Growth was at 2.2, I'm sorry, 10. Sorry, guys. It was at 10.29% year over year, which is absolutely solid. Gross margin is at 5.15%, so that's low. Operating loss is actually, unfortunately, let me make sure that I got this correct for you guys. Their operating loss at the moment is at, yes, it's at negative 229 million. That is correct. I just wanted to make sure that I read that correctly for you guys. But give or take, it's at negative 229 million, which is a red flag for the company. Now, let me see here. There we go. And lastly, when it comes to cash, the total amount of cash that they have on hand is at 94.5 million. So what's the takeaway? They're growing, but profitability right now is a problem. Redwire is strong on contracts, weak on margins. So this is a show me profitability stock. And when we talk about that, we have dealt with companies that do struggle with profitability and do fall into more of the category of it's not what they're doing now, it's what in this stock can become in the future. And that's a little more in alignment of what the play is with Redwire. But they continue to stack on good news after good news. So this isn't a stock that's completely dead. They're not dead quiet, and they are letting their investors know what's going on a consistent basis. Now let's talk about a different stock. And let's pull it up with Claude. And that's none other than one of the most hyped stocks out there within retail investors, and that is BBAI. BBAI, Claude has future 1-year projections at $4.16 and currently closed the day at $3.70. So they have what I called a disappointing, they had what I would call a disappointing beat with the previous quarterlies that they had a few months ago, wrapping up the fiscal year of 2025, meaning expectations versus reality. They didn't really impress the investors, but people are anticipating to see what's going to be happening on May 5th, because May 5th they are reporting, this is a major catalyst because they are reporting earnings again on May 5th. And also keep in mind, Redwire is also reporting earnings. I do believe they're doing May 5th as well. Don't mean to backtrack too much, but let me just check that for you. Earnings date. I just want to make sure I get that right. No, not previous one. Yeah, May 11th. So, Castellum CTM somewhere between in the month of May. It's not accurate yet because they're dialing that down. Redwire is May 11th, and as of right now, Big Bear AI is reported to report earnings on May 5th. So the big issue with Big Bear AI though is valuation. A lot of people feel this stock is overhyped, and the price it's priced ahead of execution. Like this currently right now, there's people that think that this stock should be in the below $2 within the range of $1.50 to $1.70. So now the question becomes, can they actually deliver? And Big Bear AI is a sentiment driven stock. If earnings hit, it runs. If not, it pulls back hard. Now, last but not least, we're going to be transitioning to one more stock. And I have not covered this one either. I don't think so. It's none other than LDOS, LDOS. Now, the financial strength of this company is a completely different level company from the other ones. We're covering a stock that is a much larger cap than the other ones. Revenue, $17.1 billion, growth at 3.07% year over year, gross margin, 18%, operating income, $2.1 billion in cash, and cash equivalents is at $1.1 billion. This is a real business, guys. Some recent news that we do have with LDOS, though, is the price target lowered. It did lower. Oh, I didn't even have the current price target. Price, my bad. But the price did lower to $146.06, and and that is a lot lower from the all-time highs of $205.77. And let's see what Claude says about the one-year projections for LDOS. While we do that, we'll keep going. But another thing is they're trading currently around the $155 range. Actually, that's not true. They're at $146, and they have been shooting down more. And they have a new joint venture with Altaris and a strong demand in defense, AI plus maritime tech. However, some of the risks with this is there's some insider selling, slight slowdown in momentum, and institutions are trimming their positions. So LDOS is lower risk, slower growth, but very stable at the moment. And it's still calculating. So the big picture with all these stocks, just to give a quick summary for each individual stock. Oh, there we go. It does have bullish projections over the course of the year, 27% gain at $173.22 from the current prices. But CTM is high risk, early stage, big upside. Redwire is real contracts, needs profitability. Big Bear AI is hype plus earnings gamble. And LDOS is stable, consistent, but it's less explosive. This is a perfect mix depending on your risk tolerance. And if you had to pick one of these stocks, just one, which one are you choosing? And if you want me to keep breaking down CTM and these other defense stocks as the news drops, please hit the subscribe and like button and let me know what you want to see in the comments. Let me know in the comment section what you want to see in the future. With that being said, guys, David with InvestQ out. Stay safe, keep making good decisions with your portfolio, and I'll see you all in the next video.